Ladies and gentlemen, it's time to dive into advanced market structure. And first off, I want to start this class by saying if you haven't watched the introduction to market structure, the first video of market structure in the Basic Academy, you need to get back and watch it and make sure you understand it, because this is just like mathematics. If you don't understand how to add and how to subtract, you're not going to be able to do the advanced equations. And the advanced equations are the equations that is going to make you profitable in your trading. So, like I mentioned, market structure is the backbone, it's the foundation of your trading strategy, of your trading analysis. If you don't understand market structure properly, your trading game will lack substantially. So, understanding market structure and really mastering it is key to become a successful trader, to have a successful strategy, to understand the markets and understand what's going on in the markets. Because if you don't understand the structure, you won't be able to understand anything else. So quick recap. In the basic market structure video, we talked about BOS and CHoCH. BOS stands for break of structure. CHoCH stands for change of character. Now, break of structure is, of course, breaking the previous high. So if you look at this chart that simulates the market and the market's movement, then we see market structure forming here. Low, high, higher low, and what happened? We broke the structure because we formed a higher high. So break of structure in an uptrend is when the previous high gets broken with a new higher high. That's a classic break of structure. Next wave, what happens? We have a higher high, we go down, higher low, because it's higher than this previous low, move up again, and we break structure, creating a new higher high. Now what happens? Market retraces again, but this time it breaks the previous low. What happens when it breaks the previous low? We have a change in character. In other words, market trend has now changed from bullish to bearish because we broke the previous higher low with the new lower low. Now what's happening here? We have the new lower low. Market retraces and then turns again, breaks this lower low, so break of structure in downtrend, and we create a new lower low, a low that is lower than the previous low. And in the same time, we have created a strong lower high because this lower high is lower than this higher high, and this lower high is the cause of breaking structure and creating a new lower low. So therefore it's a strong lower high. Same thing again, market retraces, lower high, breaks structure, creates a lower low, and so on. Now that was a quick recap, but in reality, market is much more choppy than this, and it's not this clean to see the break of structure and change of characters. So we're going to slowly but surely get into the real markets. Here you see a simulation of a chart that is more accurate to reality. So what do we have here? We have the high, we have the low, and we now have a higher high with a break of structure. How do I know that this here is the low and not this here? Well, it's simple. If you read the box here, the lowest point in the swing that caused a higher high is the low. The highest point in a swing before making a lower low is the high. So now we're in a bull trend. What does that mean? That the lowest low before causing a higher high is the low. So this is the strong low that we're looking for. So now what's happening? From this higher high, market retraces, creates a low, pushes up, creates a new low, pushes up, creates a new low. So we have an internal downtrend here. Market is moving downwards, internal. Why is this internal? Because it hasn't broken this low, it hasn't broken this high. Now market starts to push, creates a high, a low, a lower high, a low, and then pushes up. And does what? It breaks the previous high. Break of structure. So because this higher low here pushed up and broke the previous highest high, or the most recent highest high, it broke it and created a new higher high. Therefore, this is the strong higher low. So this is the low, here we have the higher low, and these ones are just internal structures, so weak lows and weak highs. Now from here, what happens? We have the higher high, market pushes down, creates a low, retraces, creates a low, retraces, creates a new lower low. Why is this the lower low? Because it broke the previous highest low, which means we have a change of character here. This is a change of character. Market is now showing that we are entering a what? Bear trend, a downtrend, because it's no longer creating higher lows. It's now creating a lower low. Market retraces, creates a lower high. It's lower than this high, right? From this lower high, market pushes down, retraces, and pushes down and breaks this lower low, which means we are now creating a new lower low, which means what? That this is the most recent lower high. Why? Because this is the highest lower high inside the structure here. And this lower high that you see here is just internal structure, because market here never broke this low, and this high never broke this high. So it's still internal inside. When market breaks out, then we have a break of structure and we're forming the new lower low. So I hope you guys get it. I was trying to break it down as thorough as possible. Now we're going to go to another example. Now we're going to look at different time frames for market structure. Very important, because when you analyze the market and you analyze the market structure, you do it from top down. So from a bigger time frame, a high time frame, down to a middle time frame, down to a low time frame. So let's look at that. Now let's say that the purple line is the daily time frame. On the daily time frame, your market looks like this. It goes up, creates a high, retraces, creates a higher low, and pushes up to create a new higher high, right? But inside, if we zoom in on this push, retrace, and push, we will see a lot of internal structure. So let's say the green line is the 4-hour time frame, which we call the middle time frame. HT stands for high time frame, MT stands for middle time frame, LT stands for low time frame. And that's a 50-minute, a low time frame. But let's go to the 4-hour, the middle time frame. So if we do this, we delete the internal structure there on the 50-minute time frame, and we look at the green. So you see inside the daily time frame, you have the 4-hourly time frame creating its own structure, right? Pushes up, creates higher highs, higher lows, higher highs, and then retraces. Change of character right here, signaling that market is now turning downwards. Retraces, creates a lower high, retraces, back, break of structure, makes a lower low. And now what? Market starts to push again. Breaks structure, not only breaks structure, but change of character on the 4-hourly time frame. Retraces and pushes up for break of structure and a new higher high. So that's internal. If you zoom in on the daily time frame to the 4-hourly time frame, this is what it might look like. Now let's add the lowest time frame, the 50-minute time frame. So inside the 4-hourly time frame, if we zoom in further, this is what you see. Higher high, higher low, higher high. Internal structure, change of character, market breaks down. Again, change of character to the other side. Market pushes up again. And this is the internal structure. So you can now start to understand that the first signals of market turning in your direction is by zooming in and catching the change of character on the lower time frame. That signals that market might change direction on the higher time frame. And this is why you use multiple time frames when you're trading, because you want to see everything from a greater perspective, and of course the sniper in and see what's going on the lower time frame. Now let's look at another example. So here we got the same thing. We have a low, we have a high, we have a higher low, a break of structure creating a higher high, higher low, break of structure because we're creating a higher high. And this purple line represents the daily time frame. You can see it here. On the retrace, if we zoom in on the 4-hourly time frame, so this green line represents the 4-hourly time frame. We see market retraces, pushes up, but then retraces more. Now you see this yellow line here. What is this yellow line? That is the structure, the market structure. So this is the most recent higher low, and what you see up here is the most recent higher high. All right, I actually have to change this here. So this here is the most recent highest low, and this is the most recent highest high. We don't want this line or this line to break. Inside here is the internal structure. Market retraces on the 4-hourly time frame, creates a little high here, lower high. It doesn't change character. It doesn't break this most recent higher low. It pushes up again. And when it pushes up, what does it do? It changed character internally. So it created a low, a high, and a lower low, and now pushes up internally and breaks this structure, change of character on the 4-hourly time frame. Our first sign of that the market now wants to push up again and probably even break this high here. Market retraces. And now we're on the 15-minute time frame. The white line represents the 15-minute time frame. Market retraces, and then it starts to push up again. What did it do? It created lower high, lower low, lower high, lower low. Market starts to push up, creates a higher high internally on the 15-minute time frame. And what does that mean? Change of character. From downtrend, now we are pushing up. Retraces, creates a higher low, and pushes further up to break this structure here, confirming that we are pushing up. Retraces and finally breaks the structure on the daily time frame as well. So this is how a retrace like this, a pullback like this, can look internally on different time frames when you zoom in. Now let's dive into the real charts and see some real life examples of how this actually looks like top down, from daily time frame down to 4-hourly time frame and down to 15-minute time frame, our lower time frame. Let's look at an example of USDJPY. We start on a daily time frame, our high time frame. Top down, we're going down to the 4-hourly time frame, which is our middle time frame, and then we're going down to the 15-minute time frame, which is our low time frame, to find entries for the market. First, the daily time frame. So what we do now is that we look at this downtrend here and then this uptrend to see how market changes from top down. So let's start here. Market is moving down, right? What is happening here? Our most recent low that caused this high is here. Boom. Market pushes up. We have the higher high. So we need to see a break of structure, a break of this structure, which is a change of character in this case, to confirm the downtrend. Market pushes down and creates what? A lower low, and therefore it has changed character. So from this low to this high to this lower low, market changes character, and we are now on a downtrend. From here, what happens? Market retraces, creates a lower high, pushes back down, breaks this low, so break of structure, and creates a new lower low. Retraces, lower high, lower low, lower high, lower low, lower high, and I must soon explain why this one is a lower high even though it's equal to this one. It's actually even slightly above this one. And then a lower low before market starts to change. All right, so let's look at this. Perfect example. Why is this here still a lower high when the wick actually is above these two closed candles here? Well, if we zoom in a little bit, then you're going to understand. So here's the thing. On the high and middle time frame, to confirm a break of structure, we want to see the candle close above the previous candle. Or if it's an uptrend, close below, of course. But in this case here, we have a downtrend. So the retrace, these candles should have closed above these two candles for this to count as a higher high than this. So this here doesn't count as a break of structure because it's only the wick tipping up and then moving back down, which might as well be a liquidity grab. And that is something that we're going to explain later in the advanced liquidity training. But for now, we focus on this. Two closed candles. This is the top. These candles closed below these candles. And here, what happened? Market pushes down and these candle closes below this low. And therefore this counts as a lower low. Now market is reversing. So let's look at that. We have established that this is the most recent lower high. And this here is the most recent lower low. Now, what does it have to do? It has to break this candle right here, the most recent higher high. Now, what does the market have to do to confirm that we are now moving upwards? It has to break the most recent lower high, which is this candle right here. So we do this. And what happens? Market pushes up. Internal structure, internal structure, internal structure, still internal structure, because this is only the wick, so it doesn't count. And then here, the first candle body that breaks this high. And now we have a change of character, confirming that market probably is moving upwards in a new uptrend. Now let's look at it further. Before this change of character happened, this break of structure, could we get any signal on that this might be brewing, that this change of character might be brewing, that it might start happening? Well, what we're gonna do now is we're gonna zoom into the 4-hourly time frame. But first, we're gonna chop off the market from here. Let's say we don't know what's gonna happen after here. We have this most recent lower low, and after that, we don't know what's going on. So we chop the market from here. And now we go to the 4-hourly time frame. So in the 4-hourly time frame, what do we have? Let's zoom out a little bit. Okay, so we got high, we got low, we got high, we got lower low. Then we actually got a what? A lower high, because this lower high didn't break, the bodies didn't break these candle bodies. Same situation as before. It's actually the same case. So lower high, and then what happens? Market retraces a little bit. Internal structure, break structure, and we have a lower low. So what does this mean? This means that we need to see this most recent lower high break. So if we let the market play out, let's see what happens. Chops around. All this is internal structure. Remember, this here is our limit, and this here is our limit. All inside here is internal structure. And boom, market broke the previous most recent lower high, and we have a change in character. All of this was just internal structure. Now what we want to do, we want to understand how big the retrace will be from this higher high. How much will the market pull back before continuing up? Well, we will learn to understand that properly in further lessons, especially when we dive into liquidity and order blocks. And then we're going to have specific trainings just on entries, finding entries. But now we're focusing on market structure. So we want to zoom in as much as possible and understand when the reversal is occurring. So what we do now is we go to the 15-minute time frame. We have spotted the change of character on the 4-hour time frame. Now we're zooming in further to 50 minutes. What you see here is that higher high that we spotted previously. And this line is of course a change of character that we spotted. Now let's see what the market does. Okay, so first to understand where we are. High, then we push down to a low, lower high, a lower low. And remember now, we're on a 50-minute time frame. So now the wick counts. We need to see bodies close below if this is a 4-hour or daily time frame. But on the 50-minute time frame, it's enough with the wick. If the wick breaks this previous wick, then we all good. So high, low, lower high, lower low. Now what happens? Market pushes, boom, change of character. Creates a higher high internally. Then what happens? Market pushes down again. Creates what? A lower low, because it broke this low here. Market retraces. And creates a lower low, because this low is lower than this low. So let's clean it up a little bit so you guys see it more clearly. High, low, lower high, lower low, higher high, change of character, broke down again, lower low, change of character, high, and then low, because it broke lower than this previous low. Now market seems to want to push up, and to break structure we need to either break this low or break this high. This is our zone now, this is our structure. So what happened here? Market broke structure upwards again, change of character again. Let's see where it goes. So here, from this change of character, market started to signalize that we might be moving upwards now. We might continue the uptrend on the 4 hourly and daily time frame. We broke character, we created a higher low because it's higher than this one. And then we created a higher high, higher low, higher high again. I know these ones are tight, but it has to be, as long as the new high is higher than the previous high, then this counts as a low. And as long as this low has made a higher high, then of course, same thing, it counts as a low. So therefore you have this pattern that you see here. Higher high, higher low, higher high, higher low, higher high, higher low, and then boom, all the way up here. A new higher high. And then let's see if this is the higher low. Yep, it was. And here's a new higher high. So, as you can see, we were on a daily time frame looking for what? Looking for change of character. Wanted to break this previous high here, this most recent lowest high. We wanted to break it to confirm that we are continuing upwards. We zoomed in on a 4 hour, same thing. We need to break this structure here to confirm that we're now moving upwards. We zoomed in on a 15 minute. On the 15 minute, this is the structure that we needed to break. Created this higher high, and then market retraced, of course, after breaking that. And then here, created the last lower high and the lower low before starting to push up and breaking this last lower high, which means change of character. We're showing now that we're going upwards. And on this retrace, we could have actually entered the market for a buy. This would be a perfect buy opportunity. But we need more information than that to make an accurate entry. And that is what you will learn in the further lessons. Now I just want you to understand market structure, because if you understand this perfectly, it will be easy for you to understand the rest, and it will be easy for you to understand what the market is doing, analyze it properly, and get super trades. I highly recommend that you stick around on the live sessions, because in the live sessions, we will be going through this every time. Every market I break down, almost every market I break down is top down. And I will be repeating this again and again and again, because I want you really to understand this. And I will repeat it from different angles, different markets, different structures, so you guys see it from all types of behavior that the market can give you. And this is how you become good traders. When you learn a strategy, you stick to it, and you watch somebody that already masters the strategy, how they do it, how they go about it, and let them explain it for you. And remember, on our live sessions, we always have Q&A, so don't be shy to ask questions. A person that never asks questions will also never know. Somebody that asks questions will know. Also, you make sure you watch the recorded live sessions, because as I said, I'm breaking it down every time there. And this is something that you just need to practice and practice and practice again. Ask questions in the community, ask in the live sessions. The whole purpose for you is to learn here so you can prosper together with us, make your first withdrawal, enjoy the money, and enjoy the life and freedom. With that said, I'll see you guys on the next lesson.